All right, good morning, good afternoon, everybody. Welcome back. This is Trini John from Simpler Trading. Today, we're going to be doing the broad market analysis. I'm covering the 4th through the 9th. I had a chance yesterday. We got a little bit of a weather break, if you will. Was able to come in here and put these charts together. So, you guys have had these charts in the room since Saturday. But I want to cover them and just kind of talk through them so we can kind of understand. So, before we get started, last week, I really thought about my last broad market analysis and thought to myself, well, I said if there was going to be a time in the market where we would see a pullback, it was last week. And we got that pullback, but funny enough, it was like 2 days. And in retrospect, it was like the biggest or smallest micro dip ever. And then we were off to make new all time highs again in the ES futures and the Nasdaq futures. So we'll go over that. And we'll have some charts for you. But this week looks like it's shaping up. When I look at the market watch, the econ data that will be coming out, the first thing I notice is there's a lot of Fed speaking this week. All right. So we kick it off tomorrow with PMI first thing, and this is Eastern time, just so everybody knows. 9:45 Eastern time, S&P final U.S. Services PMI. 10 o'clock, we have Fed President Austin Goolsbee. 10 o'clock, ISM Services. And then 2 p.m., we have Fed President Bostic. Okay. Tuesday, notice Fed President, Fed President, Fed President. All right. No need to say all their names. Just basically talking heads uh, that are really surrounding this next week coming up. Wednesday, same thing, guys. We have trade deficit, and then you have a lot of Fed presidents speaking, Fed governors speaking, consumer credit coming in at 3 o'clock p.m. on Wednesday. And as we scroll down here, Thursday, initial jobless claims, and then we have Fed President Tom Barkin speaking again Friday, CPI seasonal factor revisions, and then Dallas Fed President Lori Logan speaking as well. Remember, before I move on, any catalysts in here, I bring this up to your attention so that you understand that this could bring volatility into the market depending on what they have to say, and just be aware of these events. Now, being a supply and demand trader, we'll be identifying the zones, and then from there, we'll be executing those zones. Okay, so this is just a catalyst that pushes price into one of the opposing zones that we find on the charts. Now we're coming down here into the earning whispers, and I'll be paying attention because, man, you thought that last week was fun. This could end up being really fun as well. These are the ones, all these names that I circled are names that I'm interested in. I want to look at the charts. I'll be spending some time later on tonight to see which one of these I feel are going to give us the bigger moves, the more, the bigger moves outside of what the market makers are thinking. Kind of like a meta position, right? A lot of traders, I know for myself, I was looking for 440 and that thing ended up going to like 480, right? We want to be spotting those type of trades. The first thing when I look at this, I'm thinking, hey, which one of these could actually move big? And again, I need to look at the charts to get a better understanding. But the first thing I think about is like PayPal, Snap, Lily. Lily would probably have to be my number one. This thing has been on absolute fire, and I'm kind of curious after I do the chart where we could land there. So definitely, maybe get a really nice move in Lily. We'll take a look at it a little bit later. Anyways, jam-packed as well. Over here on last week, neutral results, guys. Remember why I put this on here is for anybody that's trading the neutral strategy. I want to see how it performed if you were taking the trades the way that they're meant to be taken, right? So it's really straightforward. You go short below, you go long above. All right. So you'll notice that we did get some sort of a short trigger. Like I said, we only pulled back like a day or two. That short trigger led us to the T1 or the target one of 483.60 on the SPY. And we went over this live during last week's sessions, and the levels worked really well. I would have loved to see a much bigger pullback, but prices start to go bid, buyers jump in, we get a trendy turn signal here, and then all of a sudden you get the trigger long, and then you hit T1, T2, and right before T3, we kind of stall out and come right back. So overall, we made new highs and we kept those highs in the SPY. And then over here on QQQ, same thing. Again, I can't make this stuff up. The levels worked really well. QQQ, we pulled back into T1 once you got the short trigger. So, I mean, this still, gave you a really great opportunity to go short here from 421.03 into 416.48. And then towards the end of the week, well, two times we got the trigger longs here that got you into the T1. So the charts worked really, really well. And what I'll tell you is sometimes the neutral strategy, always have it somewhere on your screens where you can pull them up anytime you start second guessing. I see this a lot. Like we've been putting these charts out for many, many years, every single week, and traders will get fixated on the market, but they forget to come over to the neutral strategy. Just come over and take a look at it and see where we are. Because a lot of times when you're new, you'll forget, and then you'll come back and take a look and go, man, I could have just went short here, did well to the downside, and or went long here and made nice money to the upside. So just keep those things in mind. Always have this on lookout, if you will, so that you can view where price is. Now, what about this week? So we have a new SPY and QQQ neutral strategy. This is what it looks like. I love these things. They're absolutely beautiful to me. It's like a piece of art. I know that when traders first look at these, I remember years ago somebody would say, "Do you just use ATR? Like, what are you using, John, to get these lines?" Because to a novice or a new trader, when I look at this, I would think, well, it's just some lines, right? But remember, the neutral strategy is based off of a lot of different things: supply and demand, Fibonacci extensions, especially when we have all-time highs. So, like all of these numbers or these lines in here, guys, to the upside are actually fib extensions. They are not supply zones. So, it's really important to understand that we don't have structure over the highs, right? And so, the way that I'm getting these levels is by using your fib extension tool, and they've been working really, really well. And again, I teach you how to do that. We have a lot of videos on that as well. Now, to the downside, it's a different story, because if we take current price and we move our eyes down and we look to the left, we can see that we have different structures in the market. And that's where these levels come in at. So these are not fib extensions and things like that. These are based off of structure and so forth. So again, the neutral strategy, the neutral box, is where I expect it to be kind of choppy. It's almost like a liquidity chop zone, if you will. Like in that entire box, I would expect, a lot of traders to get wicked out, and, the market to build liquidity off of your positions before it actually makes the move. So again, if you come down here, and we look at last week, again, just kind of taking stops and then making the move to our targets once we break to the upside or to the downside to our target. So again, just kind of like a liquidity grab area, if you will. Okay, moving on down here. As we move down, this is where it gets interesting to me. So we're going to go ahead and move this way, and let's go into SPY, the bigger picture. Now, I love using the quarterly and the yearly candles, because I do feel like during the election year, there's going to be a lot of things, noise that is going to get in the way of your trading, including mine. Okay. There's going to be a lot of things that are going to be thrown at us, I believe. I've always said that January, in my thoughts, was going to be easy, and February has always been a very difficult month for myself. And this past month, my own performance showed that. And again, I'm super transparent. I did really well all the way up until about July 30th, or sorry, January the 30th. All right. So right before the end of the year, I just really biffed it, if you will. And it's crazy, because I think, man, I can come in here, you can read the market, you can have the best technical analysis, but we're human, and we'll do some stupid stuff, and you go back and you're just like, how did that happen? Why did these things happen? You just got to journal them and try to be better. Okay. So in this particular chart, using a quarterly, that means every candle represents a quarter. These are some of the notes, or these are the notes that I come in here and I update you on. Okay. And if we look at, let's just go back to the previous note of January 28th. Price is slowly inching towards the extension target of 496.58, a new support level of 470 by 456. use the neutral strat for smaller time frame play. So once again, guys, this is where it comes in. So a lot of you are not, a lot of traders are looking for much shorter time frames, but we do have longer traders out there, and I think that it's important to understand that you still understand where the quarterly is at and what I'm expecting. But if you're looking for immediate results, this is where the SPY and QQQ neutral comes into play. Okay. So once again, coming down here for this week, there's not a whole lot of notes. First extension target looks like it was hit. New short-term support, and that just inched up just a tad, guys, at 475, 463, opposed to 470, 456. Your long-term support comes in at 450 by 440. Use the neutral strat for weekly play. All right, so let's just take a closer look here so that everybody can kind of understand where I'm coming from. All right, and when I'm looking at these, all right, you can see that I'm using fibs right here, and I am identifying this anchor here and this anchor here. And all I did was simply pull that fib up this week because we made a new high, and the 23.6 and 38.2 become that support for me. All right. Now, when I say that we came close into extension one to the upside, you can see if I were to put my level right here, that's close enough. I mean, if you're mad that, I don't know if we hit it to the tick, but we can see that the fib extension worked really, really well. Now, there's a couple things to take away from this note, and this is all part of my analyzing, if you will, is that I have to look at the chart. I have to start to feel, you know, I have to commit to the way that I feel. And I feel like it's the same as I've been saying for probably the last week or two, is that we're having fun. On smaller time frames, the 4 hours are really a great key to use. We keep coming back into imbalances and then buyers show up and we continue to stay above the cloud. But on the quarterly, we are every time we do that, we are extending ourselves from the 9 EMA and price, right? And so what I mean is the divergence between this level and this cloud here, there's a good space in there. You know what I'm saying? This is a really wide space. And it's not very common that the space is that divergent, if you will. All right. So, yes, you could say here, well, what about this time, John? I mean, that's pretty wide as well, right? And so I wouldn't say that it's not normal. It could definitely continue up. And another thing that I would say is this is two continuation candles, and three would make the three white soldiers, right? Like this, boom. What if we do that again, right? So it could look something like this. So I have to weigh a little bit of caution because all the signs are saying, hey, be cautious here. But the other thing says, hey, if you're not paying attention to price and you're paying more attention to, or you are being biased in a direction, you're going to have a really hard time because the market continues to be somewhat irrational to the upside in many people's eyes from from a bigger standpoint, right? And I'll show you the small time frames towards the end on our ES futures that really make sense of why this continues to be a buying opportunity. All right. So again, quarterly, all right, very important to understand we have 1 month and 25 days until this quarterly candle closes. There's a lot of stuff that can happen during that time, folks. This candle could literally come all the way back down, hit my support, and come all the way back up, and then we get this huge explosion to the upside, right? But we still fulfill the orders to the downside. So all of that could still happen within a month and a half. All right. So that's the thing is you could be bearish, you can be bullish, and it's all about timing. Timing is the variable, right? All right, so what would I say out of this? I'm just going to remind everybody, anytime prices come down into the quarterly cloud, it has been a buying opportunity for a very, very long time. I mean, just on this chart itself, we could go back here to 2012 and see, that you could have made money just looking at a quarterly candle and staying in this position as long as prices are staying above this entire cloud. That's the way we want to trade things, right? And it's not until we really break down below the cloud that we start to feel like, okay, things are different this time. But supply and demand traders, even when we break down below clouds, and I'll be sending out a video on Tesla. I really went into Tesla this week. When we go down below the cloud, what you're going to hear from the masses is that, hey, I don't want to touch this when it's underneath this moving average. I don't want to touch it when it's under this exponential moving average. And my biggest thing, again, the biggest factor here is how many indicators are telling you to get long when things are really pulling to the downside. Not many or any, except for demand and supply. You know, if you just look left here, you can see why price went bid back here in 2009. This is your inside and up formation. We come right into it. We find buyers. So again, just because things break below key moving averages, this is just like a trend, if you will, to help you stay in. You have to have something else, because I do not want to be the person that doesn't take advantage at the clearance rack and only be the person that executes way up here because you need 20 things to look at. I want to ride this from here when everybody's fearful, and then I want to be trimming when everybody starts to get exuberant, and then once it breaks above another key level, then I can add back in. That's the idea. So again, if the time comes, and I just want to remind everybody how I feel, if the time comes and we pull back into these longer term support levels, then this is where I want to be looking to go long. But I promise you this, if price gets there, you will be scared. Most people will be scared. This is something that I've just basically mechanically come into my Zen state, and I understand where I want to execute. Now, up here, it's really funny when we talk about extensions and the market being super bullish. It's like you get the same feeling, right? So I would imagine veteran traders who've been around a long time, I don't feel any different way down here at fear than I do right here, right? Because we feel super extended. It's hard to execute still to the upside. You know, you feel like, is this like the week that we pull back or is it not? And down here, it's like, am I making the right decision? So, you know, don't think just because the market's going up that everybody's making money. It's not easy. All right. Long term, you're doing amazing. So if you got a 401, I'm sure you're looking at that just like super happy, right? All right, so moving on out of that, and these are extension targets here to the upside. If we can get over 490, you know, 658, and your next target we're looking at is 506. But if 506 is too far away, once again, we're going to bring this down right here, okay? And you can see here if we zoom in, you know, these are your targets before 506, 498, 502, and so forth, all right? All right, let's move on. Let's get over here into the QQQ and take a look there. And this as well. So this one, if you look at it, it looks amazing, right? It looks amazing. Inside up formation, 2 months, still 1 month, 25 days. It looks like we're going to get three white soldiers at this point. It really does. And what I mean is another continuation candle that looks like this to the upside. Now, as far as the notes, last week, price reached the fib extension and there was a slight rejection, short-term support 408 by 395, long-term support 370, 350. All right, so, but if we take this just for a second, instead of the quarterly candle, let's just look at the week. And I want you to notice that we really didn't do much this week at all. I mean, if you look at this high here and you look at this high here, we're pretty much like almost like a double top, if you will. The only thing that we did was we pulled back into a smaller demand zone, and I think it was on a 4 hour. And again, I'll be showing you this on the Nasdaq towards the end of the video of where these buyers stepped in, because from here you wouldn't be able to tell unless we threw some fibs on there, and then I could show you, hey, this most likely came into 23% of, or 23 to 38% of this entire move right here. All right, so this is pretty normal. This was a nice back check, if you will, but overall, we didn't do much in the QQQ. All right. So coming back over here, we just kind of reset, if you will. And the not much happened last week, just a bigger flush early in the week and a higher close, but price barely pushed over last week's high. Extension targets on the right, I would use the 228 as near support. All right. And I meant to put, sorry about that, the right and here. So what I meant was this level right here. 422.88. Okay. So 422.88 would be my near support. This level right here, all right, hardly moved at all. Again, 409 by 396, I would expect that to hold. If we get a surprise in the market, I would be looking for this inside enough formation and the confluence of the 9 EMA. This would be a nice little scare for the market. We'd finally get that move. Things would break down. This support would not hold. And then we would come back right into this cloud that's right here. And again, I think this is where you'd get a lot of talking amongst the masses that we're finally getting that big pullback and people are a little bit fearful, but this would actually be a very healthy pullback if we ever get there. Okay, so that is the QQQ. Again, the notes weren't changed hardly at all, so I would just refer back to 128. And while we're sitting here, let me go ahead and put 422.88 in there. Yep, let's do that. All right, there we go. And then the next thing that we want to be looking at is the dollar. So the DXY. All right, so here's the DXY, and we are going to switch from a quarterly into a weekly. And the biggest thing to take from here is that everything has been playing out as we expected. Prices did move above the cloud, and let's just continue reading the notes I've given you every week. We got the bid up as expected from this demand zone, right? And prices continue to move to the upside on the dollar. Now, I say caution if the dollar is able to sustain above the cloud. Well, guess what? We're there. It's sustained above the cloud on this weekly candle. This is a big deal, guys. Now, when it comes to trendy Fibonacci, basically between the 618 and the 50, I expect there to be chop. So I'm expecting, and it's kind of cool when you start to look at this and listen to me every week, is that we have the Fed speaking, right? We got a lot of talking heads. And when you have a lot of talking heads, there's going to be a lot of chop, usually. Okay. And with the Fibonacci that I'm using between the 50 and 618 is where you get a lot of chop. So again, I'm expecting choppiness. Well, what happens when the market rips? We could, we come into a cycle where we go 1 to 2 days or so with choppiness. So a little bit of volatility, but within a choppy range is what I'm feeling right now. But again, we'll let price lead us, but this is what I'm looking for. Okay. Now, if we uh, which is 103.85. And if we come in here, we're at 103.96, so we are above that level. And market can see selling pressure if price sustains over 104.6. And all I did is say, okay, well, if we actually move over this level, then I would be expecting the market in the background to have been going down this whole time. Okay. Now, right here, we do have an inside and down formation, so please take note of that. And the max pain that I see in the market, if we do indeed start to go down, is while the dollar is moving up towards the inside and down. So it could move all the way into here again, which would put us into that supply zone. That supply zone has been tested, but this would be the max pain right into this section. And then I would expect the market to come into a relief bounce. Okay. So again, please pay attention to all these key things. And you want to set little alerts up here. So after you listen to me, you're like, okay, now we're at this point. This could be 2 days down in the market, but you know that we've reached the 618. So we could say to ourselves, okay, it could extend for another day or so. All right. And if we get up here, then I'd be expecting the market to then start to find bids and start to relief rally. Okay. So all of this makes a lot of sense when you start listening and watching this every week. Okay. This is the dollar, and again, these are my notes. Really straightforward. Let's look at what the TNX said, and if you remember, this is the same chart that we've been using for a long time. And my whole thought process for this entire quarter is that the red box and the green zone would be our levels to go into this quarter. Again, one month and 25 days left, and it's doing exactly what I thought it would do. And this is what I mean. You can use supply and demand on any chart and be able to read and understand what's going to happen next. You can see that we came down into the inside enough formation. I expected the TNX to move up. I expected the cloud to be resistance until proven otherwise. And you could see even when it dipped last week that it found some support here and then push back up. Now, to me, it looks like it's ready to roll over. And even if it pops above the cloud, you're still running into an inside and down formation. Again, I think it's going to be choppy. So that tells me with talking heads in the market, my analysis on this is right where it needs to be. Okay. So basically, when I say talking heads, there's going to be a lot of noise and it's going to be confusing. But when you go back and look at the market, every end of the week, you're going to go, oh, well, trend is intact and things just kind of look the same, right? Not much is happening, except you might start over trading. You might start um, just getting super confused and getting stopped out because the volatility starts to move. And we'll look at the VIX index here soon. You may get volatility within a short range, which means a lot of people will get stopped out. Okay. All right, moving on. So the next thing that I want to be showing here is going to be the skew. Now, this bad boy is absolutely on fire. And I can't help but to go over the same thing that I keep going over with you guys every single week. I think that is really important. I have been predicting since October, and maybe a little bit before that, that in the first quarter that we could see an extreme move to these green lines, okay? Or after the first quarter, I think is what I've been saying here, okay? This level, all right, if you're brand new and listening, welcome, thank you. But this level would mean that the back end, all right, the spies, the Qs, the Dow, all that stuff is moving down, okay? And this means extreme fear in the market. And a lot of times your fear and greed is going to match what we're seeing on the charts, okay, right here. So when we're up here, we're seeing greed and extreme greed. Down here, we are seeing fear and extreme fear. This is the best place to buy calls. This is the best place to buy puts. But notice this says 30 to 90 days out, and it would be the same way down here. So timing is the variable with the skew, and that's why I talk about all of these other things, is because the more synergy that comes between everything that I'm talking to you, the higher the probability that move is going to happen. So again, last week I said everything was kind of shaping up to show you that we could have a pullback, and we did, but in my eyes, that was a really micro pullback. This week, it's at 160. All right, that's pretty damn high. And again, if you were to attach the SPY back here, okay, to the backside, you would see that when these are at extreme levels like this skew, that you start to notice that the SPY and the QQQ and all that starts to move down. Now, and these are the extreme levels. But what I said and what I continue to say is back in 2021, and I remember this, I was following some traders and I agreed with their analysis. Not a lot of traders were super bullish up here because again, a lot of things were signaling that we should be pulling back, but the market kept staying bid and it was really hard to really press the gas. Well, what I did was I took the analysis from here and then I said early last year something's wrong, right? This was a 200-point day, by the way, in the ES futures, which was awesome. All right, but something is wrong. I do not want to get stuck in this pattern where I'm consistently scared to press the gas when really this is the new environment that we live in. So now what I did, I say now, over the last several months, is I applied it to this and I said, okay, this looks like a repeat of 2021. It really does. Where we're not seeing extreme levels, we're staying within a box that's just different, and I had to find where I want to be long, where I want to be short, and where it's matching up. And basically, what I came up with is that when we come into this lower red level, this is where I want to be long. Okay. And to kind of translate that, what it looks like nowadays is that this is the level where if you were to go on media post and listen to talking heads is where a lot of people are right at the cusp of, yep, the market's going to definitely go down, this is going to happen, right? But and the market has pulled back into these levels, okay? But this has been the time to go long. And then up here, we're pretty extreme. I mean, if you look at this, if I just kind of draw lines across here, this is really getting extreme. And you could see that every time we have come into these levels, we have got a pullback in the skew. Now, listen, when we get a pullback in the skew going to the downside, that means the market is starting to pull to the downside. Okay. When our skew is extremely high, people are just super greedy. They don't think that the market's ever going to go down. And then max participants are on the call side. When max participants are on the call side, guess what they do? They pull the rug. But again, timing is the variable. I want to stick to this box in here. Okay. And you could see it could still come up here, which would put us into extreme greed. Okay. So please understand that. But I want to play only within this box. All right. And I'm sorry that I'm spending so much time on it, but to me, a lot of people think the skew is broken, but they just didn't analyze it the right way. It's actually working very, very well. All right. So this portion is super important. And what I will tell you, and I keep wanting to remind you, and I'll bring you back to this level. If for some reason we get here in 2024, I am going to buy big time. All right. This is where my dry powder is going to land me. Okay. It will be scary, but you can go back and you can study the skew. And I promise you, over and over and over, timing is the variable. But this line here, guys, says this is where the most fear is, but this is where it's time to buy. Right now, again, we're just living in this new environment that's a little bit different because a lot of things are telling you to be careful, but careful for how long? Last week it was 2 days, right? And you could go back and just study this and see. My last note here, it's extreme, guys. We're extreme. We're at an extreme level. And if I were to go back here and go like this, let's see how extreme it is. Okay, this is where we are. There is no denying, again, if you put a SPY chart behind this, you will see what I'm talking about. The market will go down in this environment. Again, timing is the variable. This is super extreme to the upside. Okay, all right, I think I hit that enough. Moving on down, let's go to the fear and greed. Fear and greed for this week. Now, I thought this was interesting. Last week was at 77, right? And this week at 67, I'm like thinking in my head, I'm like, okay, so you're telling me the 2 days that pulled back, um, we actually dropped? Like it seemed like it would actually come over here a little bit more. But maybe, all right, what this is telling me is that people started to get a little bit more fearful. All right. Even with the 2 days pullback, then we make new highs. And then now maybe people are getting a little bit smarter and saying, and I shouldn't say that, that doesn't sound right. People are just being more cautious and saying, you know what? I'm leaning more towards the neutral side. This is starting to feel kind of frothy, right? Maybe I want to buy some puts. So I think that's where we got the pull, if you will, from 77 to 67. So we're extremely greedy. Now we're just greedy, and I don't know. I would have thought it went to the right just a little bit more this week, but no, that is not accurate. All right. So fear and greed, that's where we are. Now, here's the good stuff. This is where I just get super excited every time that I'm talking to you guys, and that's the future side. So we're going to go over the ES and the Nasdaq before we get started. ES futures, every 10 points equals $1 in the SPY. Okay, so you could trade the SPY off of these charts. You could trade the SPX and the deviation between SPX and ES futures. You could just put in your watch list ES minus SPX, and it'll give you the separation of points and how they are related. Okay, so again, just put ES futures minus SPX, and you'll get the equation of what you're actually looking at here. But ES futures, this is your new weekly chart. It really didn't change that much. Your support comes in at 49.30 by 48.60. This level down here, I do believe that this is a very important level. This was a previous all-time high from before. And the 9 EMA is finally caught up with this level. So anytime that I see levels on my chart where now all of a sudden there's synergy around them, So inside enough formation, there's also a trendy edge under there. This was a recent all-time high, and the 9 EMA is caught up with it. Tells me if the market were to pull back and give you a scare, this is exactly where I want to try and take a shot at, a really nice shot to the upside here. Okay, so just keep that in mind. But this is your immediate support, if you will, on the ES futures. These are extension targets, and I was asked this morning if I could make this a little bit clearer where I'm putting my extension targets to get those. And what I did was I now on my charts, guys, is you have a blue dotted line instead of a black one. So I used black before so that I didn't have a bunch of lines on my chart. Okay. So if you're at home and you don't want a bunch of lines, you just come in here and you can edit these properties and you can come down here and change your line. I changed it to black so you can't see it, but now we have some members who are asking if I could show a little bit more where that's coming from, just so that you know that you're kind of, you know, lined up with me as well. Okay, so that's what we got going on. Again, trendy edge worked very well. You guys can see that. That's how we teach it. It came back. It was explosive. We had the 9 EMA. We have, and I'm showing you, it says ME. That stands for monthly edge. Is right there. That little purple, if you will, or pink level there. If the line were to break down here, then I would expect to move to that level. That's what it's saying. And far as the overall move, see this 618 right here? This is all I'm doing is if you click here, I am using the range from the pivot low here to here, and you can see that by my lines. Okay, this is the 618 or the golden Fibonacci of 4469. So this trend for 2024 is intact, okay, or this rally, I should say, since October is intact until we break below 4469, okay? But even if we break down, like I'm not telling you to stay long as we stay above 4469. I'm just saying using the Fibonacci, this trend is broken under 4469, okay? You also have, as soon as we were to break there, though, I'd be expecting, traders to come in around 4,300. Okay. All right. So moving down, let's get into the daily look for this week. So these are your buy triggers, and this is your resistance and short trigger. Just as a quick note, if you're brand new, you may not know this. We don't automatically just go short because it touches. We understand the levels. We go to a smaller time frame, and we can look for little key things that I teach in the room to help you get short and so forth. Same thing down here on the buy. We don't blindly buy unless you're being aggressive. There's other ways to be conservative and buy at these levels, but these are your buy triggers, your resistance, and your short. Before I forget, please don't forget to like this video so that I continue to share it out here on YouTube. And I hope you appreciate it. Moving on down, we're going to go in the 4 hour. I think this is where it's important to understand that our levels have been kick ass and they are working very, very well. ES futures just came down into support that I gave you from the previous time. It worked very well, and then prices picked up, and they shot off to the moon, and things are looking good. Now, again, if I were to bring you into here, what is important is for you to understand, all right, that we have. Let's go over the last 90 days. We have a ton of imbalances that have been working. And so it's really important for you to know where they are. We had this in advance. So when price came down here, we were ready. We had all these in advance, and all of these ones that are down below, and you could freeze the screen here and put these on your chart if you wanted to. That's the easier way to do it. These are all imbalances in the market, and this happened ever since October. Okay, we created imbalances in the market, and during this journey to the upside, you would have heard things like, "Hey, there's not a lot of volume behind here," or "Hey, there's not a lot of structure behind this move." Well, imagine saying that down here, and then it's here. You're still in denial. You're still in denial. You missed a huge run, right? And one thing that I'll take you back to and really think about this is the overall analogy that I gave you earlier in the video of how traders, when things break down, they always say, well, this doesn't look good. And it's usually they're saying it doesn't look good right into imbalances in the market. All right. So it's very important that you understand that most indicators or the way that people teach, they're not looking for demand zones. They're looking for prices to get above certain levels and they need to see volume come in before they make those moves. But what we're doing is we are identifying imbalances in the market and we're executing those imbalances where most people are stalling and having a hard time. Okay. Now, you'll notice during this journey that the cloud really is a great thing to attach to your screens, right? And it helps you stay in a trend as well. But when we break down below it, the first thing you should be thinking is where are we headed to? And that's why we look for demand zones. We get back above the cloud, we think, hey, I don't want to get short unless we start to break down below the clouds. Well, if you're breaking down and you're coming right into support, I also don't want to be getting short. I want to be looking, I'd rather be looking to take the long. Okay. So that's what's going on here. We have a support level, support level. This is the one I would look for some reason if we get a scare. Notice we didn't come back to this level. We did come back to a level in here. So if for some reason we break down, I would be looking for buyers to come in here on a 4-hour chart. If we continue, what we continue to see are very short dips, and I would expect this level to work. Okay, and again, smaller time frames. When we get there, we understand how to enter these zones, if you will. All right, so that's the ES futures. Let's go over to the Nasdaq. All right, this is your weekly. All right, same thing here. Absolute beautiful move off the inside and up formation. There's your inside, and then we have the up, and we are getting closer to some targets up here. Upside targets, what I'm looking for is anywhere between 17,909 all the way to 18,593. This is possible, but again, there's a little bit. What I like about the NASDAQ, which is leading in the market, is that it had the really nice pullback first, all right, and then it came closer to my 9 EMA, which makes me feel more comfortable. Whereas like the ES futures is a little bit higher up here, and we have more divergence between the two. But either way, be looking for signs from the Nasdaq as always. This structure in here to me is a little not my favorite. You know, it'd be different if we were working on an inside candle last week or if this guy was inside. The first thing that I think about is when I come over to the daily is that we don't have an inside enough formation, guys, that is in here. And I always teach this, all right? If we don't have an inside and up formation here, prices can go down just as fast as they went up to search for that inside and up formation. Because we don't have an inside enough formation here, what I would do is refer back to that 4-hour cloud that I just went over. So very important for you to understand that as well. Now, when I'm looking at this, you could quickly, and I'm not into shapes, but I will talk about them if I see something that is possible. So to me, this looks like a possible inverted head and shoulders. So if we were to pull back here, then we could see a move like this. Okay, so again, inverted head and shoulders is possible in that area. Far as the daily, this is your resistance. All I'm doing is using the trendy edge. You have a short trigger that's up here. Again, I took this number and I moved it from the weekly into the daily. All right, and just kind of rounded it off and made it 17,909. But again, not necessarily a short trigger unless we get a signal on a smaller time frame. Okay, very important things to understand. Same thing for the trigger to the downside. Okay, now the 4-hour. Once again, these levels have been working very, very well. You can see that. And every time we've come back to an imbalance area, it's been a great time to buy. Okay. Now, prices did come back into this imbalance. We could see that prices then went bid. Another key thing, lower. Well, actually, we made a new pivot high, so that is bullish. So if bulls can get up and over the 17,751, things look good that we take out this previous high. Okay. So again, please follow price action. One of my favorite things before we end here is being able to do a weekly analysis with you and giving you nightly charts or morning charts that we trade off of every single day. All right. And so what you get is, I give you this analysis to kind of help you understand how to look at the market, from a quarterly perspective into a weekly, into a daily, into a 4-hour. But really, what it comes down to is no matter what I say or no matter what anyone says, price is king, right? And when price is king, we just want to follow price. For example, this was Friday's blueprint, okay? And it worked very well. Matter of fact, a lot of us went long here and we could see that price moved all the way into our fib extension target. And we could see on the Nasdaq, we moved from the demand zone, and all this is sent out in advance. So when we opened up in the morning, price was not here. We waited for price to come in here, and then we executed the trade. Okay. This is red because this is actual supply. This is gray because these were fib extensions. Now, a lot's not going to change, just so you guys know, for tonight. I'm most likely going to use the same blueprints here. The only thing that is going to change are a couple of the targets, but we're going to leave the same zones, if you will. I'm going to change up the liquidity chop and so forth, and I'll post those here in the room so you guys can use those for tonight, okay? So again, I really appreciate you. Again, don't forget to hit the like button. Um, let's have an amazing week. I can't wait to trade with you all. My next video coming out will be, and I've already made it, just about to send it out here in a few, is about my Tesla position and kind of my thoughts after the first week of owning Tesla, and where we're going, and where I believe, how I'm going to be emotionally with the trade that I put on. And then my next one is going to be our alerts from this last week. I'll go over those. And then we had a question about debit spreads that I want to cover in the alerts as well, so that there may be a better understanding of that. So